Hello and welcome to this live analysis webinar with me, Muta, Chief Market Analyst for TIO Markets. I'm very happy to have you here today because this is the best part of my job. I love teaching and helping others. So I'm so happy that you are here. And I really want to give you some solid advice on how to do market analysis, because at the end of the day, that's the way you can make sure you are prepared for the trading day. There is no point in following somebody else's signals blindly and you don't understand what's happening. That could work for a while, but there'll be a time will come when that other person will start to have struggles with his life or her life and with his trading. So that's when you need to that's when you realize that you have to have the knowledge and understanding on how to analyze the markets and how to trade. And that's what I'm hoping to help you with today. So let's start, let's get going. And before anything else, I need to remind you that we don't provide any investment advice, and this is solely for marketing purposes and educational purposes. So why should you listen to me? I have over 20 years of experience in trading and analyzing the markets. I basically have been managing quite a bit of money and then working in the Forex industry. That's a lovely position to be in because I get to be in the markets every day. I get to see the markets every day and grow my understanding and apply my skills and help you guys. That's the best part of it. So that's, webinars is part of this service, but I'm also helping you with my analysis. This daily analysis report I provide at tiomarkets.com/analysis. Just go there, register, and you have it for free in your inbox. And you get these. I can't be right and correct about the markets all the time. No one can be. That's absolutely that should be sort of very evident to anyone who's been in the markets for quite some time. But there are times when we catch these big moves, like here. This is the Dow Jones, the CFD that follows the Dow Jones index, and this market really moved quite nicely and hit the target level at 31,930, and I think it went through the level as well. Yeah, it did. So anyway, you can catch these, you can learn from those reports, and also you can go to our Telegram channel, and whenever I see something interesting in the markets, I'll post them there, and I post them as trade ideas. And then again, they are a learning tool for you so that you can better understand what to look for. Say, for instance, this situation here where pound USD hit both the targets. You can take this, go back in time and see how the market behaved before I gave that trade idea, and you can learn what is important and what leads to big market moves. So go to bit.ly/free trade ideas. That's free-trade ideas. And that's how you can get access to this. Okay. When we do, Ali is saying that the voice is interrupted. Can you please explain? Can somebody else confirm if there are voice problems? We tested the sound earlier and everything was okay, but if something has happened, I would need to know. Please let us know if there are any problems. Or maybe, Ali, it could be your end. It could be your internet connection that is cracking up. So you might want to log out and log in again, and hopefully that helps. So when we do a live analysis, we don't concentrate so much on what's happening with the fundamentals. In this webinar, I will concentrate on support and resistance levels. We might apply some technical tools like moving averages, oscillators, but mainly we look for support and resistance levels, oscillators, trends, wedges, double bottoms, this sort of thing that tells you quite directly what is actually happening with the price, where people love to buy and where they love to sell. And obviously it's not the little guys who move the market, it's the institutionals. So if money is flowing into the market, and especially if institutional money is flowing into the market, it tends to trend higher. And if institutional money is flowing out of the market, then it means that the market is flowing, sort of trending downwards. And this is what we try to find. Okay, Rod is saying no voice problems on my end. Excellent. Good to hear that. Thanks for that. All right, so live market analysis. Let's move on to the charts. And first, I thought it would be interesting to cover oil, mainly because oil is such an important market at the moment. You know what's going on in Ukraine. You know that Russia has attacked Ukraine, and now we have a situation where European leaders are banning some of the, most of the Russian oil exports, or from Europe's point of view, oil imports, and that actually drove the prices higher. This is what happened during that period, and actually, if we go to the daily chart, we can see what happened earlier. But now we have to make some sense of this market if we want to be able to trade the market. Obviously, if you are happy losing money, hey, I hope you're not. But if those that are, because there are quite a few of those, if there are people who are happy to lose money, they just are so lazy, they don't want to study the markets, they just want to trade and get the excitement. If that's what you want to pay for, then that's fine with me. But for the rest of you who really want to learn how to analyze the markets effectively, I'm going to give you some ideas here. So when I'm looking at the market, I try to establish if there is momentum. That's always the key. That's the key question. Is there momentum? Oh, Rod is asking, is this recorded? Yes, definitely. There is a recording, and we'll send it to you guys maybe tomorrow via email. So it's important to register your email address with us. If you happen to use the direct link, you might have not given the email address, but if you send it to me as a private message here, I'm going to make sure you get the recording. So back to the market. Oil. The most important question is, do we have momentum in this market? And as we look at the price action, we can say that, yes, we have had momentum in here. How would you know that? Who can tell me, how do you know that market has upside momentum? There's a little delay in you getting my voice, and then another delay when you type in. So I'm going to wait a little bit. And just in case we have very new people here, this is US oil. This is the West Texas Intermediate oil, crude oil, or a CFD contract that is actually tracking the futures contract of WTI. And in this chart, we have 8-hour bars or candles. So each red candle is a period, an 8-hour period when the market went down, and each green candle is an 8-hour period when the market went up. Oh yeah, Rod is saying higher highs and higher lows. Excellent. And many people try to make trading very difficult and complicated, but that's one of the most important and very effective things that you just grasp from the chart very quickly if you don't go to too small time frames. I mean, if you go to 1 minute chart, you might actually see a downtrend, and then you just want to trade the market to, you just want to trade down because of that downtrend. But if you go to the 8-hour chart, you can actually see that the market is very close to a support. let me make this a little bit bigger. So I'm going to increase the width here. Yeah. So guess what happens when a 1 minute chart here, when the price in 1 minute chart hits the 8-hour support? Is this gonna last? Probably not. It could move lower, but quite often it doesn't. So just following 1 minute chart or a 2 minute chart or a 5 minute chart might not be that good of an idea, because it doesn't tell you what the institutional money is doing. They are not interested in 1 minute chart. They have so much money to trade that they just simply can't trade a 1 minute chart. So the first thing I do, I look at the market, try to see if we have higher highs, higher lows, and then I go and look at where the support and resistance levels are. So here's obviously the latest support, and then if we look at the next one, it's down here. What do you think will happen if the market doesn't basically honor this support anymore? This is 114.30. So if the market penetrates this, there's a couple of things that can happen. The market can penetrate it a little. So you often see me in my analysis, you often see me writing that I want to see a decisive penetration in order to take a trade, for instance. So what I'm looking at here is something like this. The market comes below, it moves quite a bit below the support, then it tries to rally back. This is one possible scenario, and then it fails. And that failure is often a very good signal that, yes, this is a decisive break below the support. And then it's more likely that the market will move to the next support. Because unless there is a sudden change in the fundamentals or in the news flow, this is quite often what happens. Then the question obviously is, a relevant question would be, how does it look like when the market has only a very quick move, sort of undecisive penetration of a support level? And let me see, maybe here's something that could work as an example. There. Here we have a support at 99.40 or so, and the market moves below it, but then moves above the level and closes up here. This is an 8-hour chart. Okay, it's a big chart, big time frame chart, but the principle is still the same. The market moves only for a moment below and then moves back above. So that's not really a decisive move below. And yes, the market moves higher after this. So that's basically what I mean when I refer to decisive and undecisive breaks of support and resistance levels. Often when I do analysis for you guys in the daily analysis report, I try to see where the big trend is going, but sometimes I'll always try to provide you the levels for intraday trading. So to get an idea of for the big trend, we first look at those higher highs, higher lows, and if you are new to trading, the moving averages can help you, because when they are wide apart and they are sort of steadily moving higher, that's a very good visual for you that we have an uptrend. Then the next question, okay, we have had momentum here, but do we have any signs of momentum slowing down? And if we go and copy this up there, we can see that for some time now, the oil price hasn't been able to make a higher high. So it's kind of it's ranging. It can't move above this high. The last time the market moved there, the sellers came and pushed the price down. So what does this mean? With the background of oil probably being quite high, it has moved. If we look at the weekly chart, it has moved so much just lately, and this could be one huge topping formation. So we might want to be a little careful up here with our longs. And then the question is, how do you do that? How are you careful? So maybe have a smaller position size. If you bet that this support is going to hold, then maybe you trade smaller size here than you trade it down here or here. Anyway, so we can see that the momentum is slowing down, and this support at 114.30 is now a key level. So if we get that decisive break below that level, then we could get a measured move lower. So this is the width of this range here. And if the market moves below this level and doesn't recover quickly, then we might get a move all the way down to 107 or so. But because we have the support here, then I'd guess that yes, maybe this is somewhere around 111 would be the first target. So I'm basically making a guess here that if we get a decisive break of 114.30, then maybe somewhere around 111 we have target 1. Let's actually do that. So we can refer back to this later on and see whether this worked out. So this is the T1 or target 1, and then the measured move points to 107 roughly. So we will make this our target 2. And that is actually a valid trade idea. But again, it's conditional to price action. If it's not a simple like an idea that you just sell right now and you don't think about it. And that's not my style. I'm not advocating that kind of style, especially because I can't provide you investment advice. But secondly, because I don't want you to become a blind learner or not even those people who just want to trade blindly and never want to see the trouble of learning. So I don't want you to be like that. I want you to grow as a trader. Okay, this is one scenario. The other scenario is that we get a little dip below this 114.30 level, and then the market moves higher. Then probably the market moves somewhere up here, somewhere close to the recent highs. So I would say around there. Let's see what the parameters are here. So 120.50 to 122 roughly, that's where I'd say is a reasonable sort of alternative scenario. And now, because we have the trend higher, I'm not saying that the alternative scenario is a less probable scenario. It really depends on how the market treats this support at 114.30. If we just get a little move here and then move higher, then that's a more likely target area. If this support breaks decisively, then these here at roughly at 111 and 107, those are the targets 1 and 2. So any questions? Let me get drink here, and I'll wait for you to type in your questions. Oh, by the way, Rod, you wanted to see analysis on pound USD. Yeah, let's do that next. I'll definitely want to do that. But if you have any questions, on the style of analysis I'm doing here. Maybe you can let me know. Does it make sense to you? Just very simple yes or no would help me. At the end of the day, this is interactive webinar. It gets boring if I talk all the time. You know, I want to see your questions, guys. I want to see your participation, really. Yes or no? Does it make sense? And then we can continue. Okay. Okay. You're not very chatty today, are you? Dereya is saying that it makes sense. Okay, thank you. And Rod says yes. There seems to be quite a big delay in me getting back your answers. All right, so let's do this. Let's go to pound USD. There's some old lines here. I'm going to get rid of these first. Okay. So let's use the 8-hour chart as well, here as well. And this actually gives us some very... Oh, Deraya is asking, how do we use Arch? I have to say that that's a tool that I have not been using. There's a lot of tools in different packages that, you know, I have sort of decided not to get too involved with because I just don't think they are needed. You really don't. You really don't have to use all the things that you have in those packages. What I'm giving you is price action analysis. This is something that has worked for me for quite a while, and I know it works for, you know, thousands and maybe tens of thousands of traders around the world, or hundreds of thousands, because most traders just lose money, but there are those that actually are making decent income from the markets. So this market is quite different to what we saw earlier with oil. Now we have different behaviors here. Oil was just moving up and down very nicely. Higher high, higher low, higher high, higher low. Just a schoolbook example of a trend here. Then we go to cable, also in 8-hour chart, but see how different it is. Here we have one period where the market goes down a bit, up a bit, down a bit, up a bit, down a bit, up a bit. Then comes a directional move lower. Then comes a range. Then we have a range here. Then another directional move lower. Then we have a mini trend against the big trend. Up, down, up, down, up, down. And then another trend. And then, you know, just a very quick drop through that support and an extension to the downside. So how do you trade something like this? One of the ways is to do kind of range analysis. Let's use support level here. And I was going to use the same support level here, but it kind of coincides. So when you see a range like this, and the market just breaks the support, one option is to go short there. And the same would have worked here. But then you have a problem. Sometimes, like here, it seems that the market is going to go through, but it bounces higher. The same here. The market goes through a little bit, bounces higher. Goes through a little bit, bounces higher. So we are back to this question of, do we have a decisive breakout or do we have just a, you know, and a test of that support. And these fake outs can be problematic for the traders who don't manage their risks. So if you do this, you have to trade it with a small amount of money relative to your account size. And if you just happen to get caught here and the market goes to your stop, that's fine, because the next time the market goes a long way through the support, and then you make the money that you lost here and much more. But you have to be consistent. Then the other option, how you can trade something like this, is that when the market comes down here, you sell a little bit, and then you sell a little bit more, and then again a little bit more, and you keep on adding to your winner. It's kind of basically the opposite that most people do when they happen to get caught long here. People that lose money, they buy here, then they buy here, then the market goes lower, then buy more, and then again more, and that's how it works. The market just takes their money away. So you can do the opposite. All right, so that's one way of trading a market like this. What do you do now with cable? That's kind of tricky, because the market is already quite extended, and when it's this extended, it could actually start turning higher. But my rule of thumb is that as long as you have resistances above, as long as the market is in a downtrend, it doesn't make sense to start buying the market, because there are people who do that. Like I told you, most traders that lose money, they would buy there and here and here and here, and they keep on losing money, and then they buy here, and they're so happy. The market moves a little bit in their favor, and they think they've cracked trading now, and somehow they ignore all the losses that they make here. Now, a professional trader sells there, 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 and there, and here. And eventually the professional trader loses some money when the market moves higher, but it doesn't matter, because he made so much money on the way down. Again, does this make sense to you? How many of you can say that, I'm actually doing this? I'm adding to my winners when the market goes down, and then I lose a little bit at some stage, but it doesn't matter, because then I was quite okay here. All right, maybe you are typing your answers at the moment, and it just takes a little time for the answers to get through. But now, yeah, back to the present time. We have cable quite low here, and if we look at where the potential, I'm sorry to hear that. Rod is saying I added to my losers. I'm very sorry to hear that. That's the way. A lot of people think that the markets are oversold, and then that's the reason they think they need to buy. But that's wrong, because the market is oversold according to this indicator I have here. Let me point this. See this? As per the stochastic oscillator, the market has been oversold from here to here to here to here to here, and it's still oversold almost. It's actually starting to creep up, so that the stochastic oscillator is trying to get back to the sort of neutral territory. So all the way down, the market was oversold. So buying a market based on the fact that it's oversold basically is a huge mistake. You can go and see this happening all the time. Oversold and overbought only works in a range. This is something you need to remember. when the market is ranging, like here, and it moves to an oversold area here, it means it's close to a support, and then it rallies. Yeah. And then the market, let me take this and, oops, there we go. Then the market is almost overbought up there, and see what happens. It sells off. But that applies only to ranges. And if you want to look for oversold or overbought conditions, what you need to do is to look for a trend. Say, let me say this again. So if you want to sell overbought areas, then you need to look for a downtrend. So here we have the moving averages pointing lower, we have the channel pointing lower here, and here, can you see this? The market is overbought, but it's in the certain context. It's in the context of the price moving lower. And see how beautiful that trade was. That's amazing. That's about 4.8% that this signal was worth. So if it just sold in a downtrend when the market was overbought, yeah, that's how it works. And we always have to remember that after this webinar, the market could rally from here all the way up there. And then you could come back to me and you could say, yeah, see, it was oversold. Yeah, it was oversold, but it was oversold here as well. So you have to think not about the price levels. You have to think about the probabilities. What are the probabilities of you succeeding in trading if you repeat the same process 10,000 times? If you buy here, buy here, buy here, buy here 10,000 times, you're going to make money for somebody else. Stochastics is much similar, very similar to RSI. There isn't much difference. Oscillator is an oscillator, but it has two lines. It's basically both of them are momentum indicators. So when the momentum starts to wane off, then, or when it starts to wane, then you have this giving you a visual highlight. And then when the momentum starts to move higher, both these indicators give you, again, a visual confirmation that, yes, this is what's happening, even though you can see all of this from the price chart itself. But sometimes it helps, especially my clients who want to see how the market works. It helps them if they see that the oscillator is moving higher after this dip. So the only real big difference to RSI is that here we have a moving average. So we have the stochastic oscillator, the blue one, and then we have the red moving average here. So it kind of gives you signals. But RSI is just one line. 5 period and 14 period, I'm not saying one is better than the other. It is a question of how reactive the indicator is. So if you want to get the more fluctuation, i.e. more signals from the indicator, you use a shorter percentage K period. Now you get these swings up and down in the indicator. Rod is saying the last couple of days price action is based on the FOMC news event later today. So how do you trade by the rumor, sell the news? Often when we have big events happening, like at the FOMC today, you often see that sometimes if the market has been trending lower, the market just suddenly moves to a major support level. It's kind of traders take all of the air out of the market. They just drive the market to a sort of safe level. Or if the market has been moving higher, it might settle to a very important resistance level or a support level if it has been retracing a little bit. So I often see this happening, and then I know that if the news event itself isn't going to include anything hugely surprising, then this level is probably going to be very important. But if there is new information hitting the market, like just the other day, we had the European Central Bank President Lagarde saying that in the press conference, she said quite often that she's worried about fragmentation risks if the ECB raises the rates. And there was the plan, ECB had the plan to raise the rates much more than the market had been expected. So that immediately reminded traders of 2008, 9 and 10, when there was Euro crisis. There was first the financial crisis that led to Euro crisis, which basically was all about the southern European nations having to pay too much for the funding that they get from the markets. And if they have to pay too much, they just can't afford it. And that means they turn to European Central Bank and say, we need money, we need your support. And that's when Draghi said that, okay, we are going to do whatever it takes to save the euro area. And they started buying bonds and pressing the interest rates. And that was quite effective, but always all the good things have to come to an end. And this is now the end. The European Central Bank is now buying, is now moving the rates higher by stopping the purchases of the bonds. So now we have a new danger. The ECB is letting the rates go higher, and the southern European nations like Italy, which by the way is the second biggest bond market, government bond market in Europe, if they basically have to get their money from the markets, it will be just too expensive to them. And then the Italian exit from the European Union, the risk of it grows, because we have China and Russia that would love to see these countries moving away from the fold. So they probably would throw money at them, Italy, for instance. So all of these fragmentation risks suddenly came into the very center of the trader conscious, and that's why we saw stock indices just plummeting, and then we had all the other risks also there. We had the stagflation risk, we had the higher rates risk that slowed down the economy, so everybody was selling stocks, especially in the US, but also DAX went down big time. So that's an example of a situation where you had sudden new information coming into the marketplace. I had already concluded that maybe DAX has put in the bottom, maybe based on the price action, the worst is over, and maybe others had been thinking the same because the stocks had risen so much from the lows. But as soon as the new sudden surprising information hit the market, then the markets plummeted. Okay, let's finish what I wanted to say about pound. So here we have, actually, to be very correct, precise, the pound is now trading at 121.02. One spot 21.02. So 21.02 is a resistance level. So that's an area where people will sell the market if they sell it. And if the market now moves lower, we have another lower high. and then we just have to see whether it goes below this low here. So that's the way I'm looking at this. If market sells off, yeah, we have the downtrend there. If the market moves above this level decisively and starts to make higher lows here, then we have probably a reversal. And the next level we have to pay, the market has to pay attention to, maybe this low here and this high create a resistance zone. So the market really has to clear these before it can have a sustained recovery. And then the next level to look at is up there. So a good break above 2210, one spot 2210, would probably take the market all the way up to this next resistance at one spot 2430. Okay, so that's where we are with this. Let's take a look at gold. And here we have an interesting market. Here it was doing the same as the oil was doing, but just the opposite. Very nice, lower low, lower high, lower low, lower high, lower low, lower high. It was trading nicely to the downside. Then a quick move higher. I was saying down here that, okay, the gold could rally from here, but I expect the rally to be quite short because Russia has a problem. It might have to sell more of its gold reserves, and maybe that's what happened. We don't know, but what we can know is that the people started selling this market there, and there, and now it has moved down again. So in order for the gold to rally now, it really has to move above this high, 1831.50. It attracted buying down here, but that's the last spot where the market was selling. It was reacting to these lows. So in order to get above the level, in order to create a sustained move higher, probably at least to this 50-period moving average at 70.43, or maybe even here. In order to do that, it has to have a decisive breakout above 1831.50. Decisive, again, for those that came a little late, means that we have market penetrating a resistance and then making higher lows. Say, you can look at hourly chart, 5-minute chart, whatever, but you can see how the momentum behaves above the level. If it's only a quick dip and then move lower, then it probably moves down here again. So that's what I'm seeing in gold at the moment. And let's see, we have to finish soon. It's almost, we've spent 50 minutes here now. So one more. Here's Bitcoin. And this is quite interesting now. We've seen a lot in this market, and this isn't something that I analyzed with you guys, but this was a private discussion with a trader friend of mine. I was referring to this head and shoulders formation here, and basically took a measured move target from the high of that head in the formation to the neckline, and then made a projection from that neckline break, and that basically takes us right where we are at the moment. So the market sometimes quite amazingly follows these formations and their kind of indications that they give. Here the market moved all the way down the same distance. And basically, how do you catch something like this? It's really when you see the market moving below supports. When you see that the market creates support there, then another one there. So all is good for the bulls then. There is another support, the market rallies higher, but then it comes down here. It breaks this support. It breaks this support. Then the next question is there a reason to believe these supports will hold? Okay, some people thought that's going to be the case. So 1, 2, 3 weeks, 4 weeks, the market stayed up here. People were focusing on these lows, but then even that level broke and the market is now down to this. And this is often a first target. That's the projection you get from the market formations, the sort of measured move targets. They are just first targets for the market. But if we look at where this market might be heading to, I think the next significant support is somewhere down here. So about, let me move a bit, that's 1400, sorry, 14,000 here. And then this one is about 12,600. So probably into this range, the market, unless we see a sudden change in the risk aversion that we have at the moment. I think there could be a bounce from this target, but then we have the resistance there. And if that fails, then it's quite likely that the market will move down, because then we have further confirmation for a downtrend. So eventually 12,600 to 14,000 doesn't look like it's I don't think it would surprise anybody if the market went there, but yeah, that's quite possible. So looking at this market in a smaller time frame, it's in a free fall at the moment, and the nearest resistance in the 8-hour chart is this low here. The traders need to be able to push the market above 20,700 and then create higher lows, and then we might see a move back to these areas here. Possibly that is going to be a factor, because it's a prominent low. So there's quite a bit of resistance ahead. Let's see what the market does. And always, please remember that you don't know where the market's going. I don't know where the market's going. We just have to create scenarios and think what might happen if such and such. And then we follow the price action and we see if it confirms our ideas. And only then we can trade the market. And even then we are wrong sometimes. The indications, we read the markets wrong, we get the trades wrong, but that's why you have the risk control, the risk management measures in your trading plan. Your plan might say that never lose more than 3% of your capital in one trading day, never lose more than 1% of your capital in one trade. So you have 3 trades per day, and that forces you to find really good quality setups. You ignore all the rubbish, all the weak trade ideas, and you go for the best. And that's how you can have a positive expectancy in your trading. Okay, Ryan was asking, how does support and resistance differ from supply and demand? It's basically the same idea. This is when you see market, let's go here, a lot of lines. I'm going to get rid of these. Hey, let's go back to oil. So when you see market hitting a support level, like I think I was referring to this high in my analysis, and then the market went a little bit lower and moved higher. So this is an indication that there was demand, and it's quite often around the levels where there was resistance earlier. So if the market hits a level and moves higher, it means that there was demand there. If we go and look at this here, market came to this level, moved higher, came back to the same low again, so, and then rallied. So it means that you had demand here. That's a demand level. That's a support level. It's basically very same principle. We just use support and resistance levels. It's just a different language for the same idea. All right. Okay. So listen, guys, my throat is getting achy. It's been, we've spent 1 hour here now, and it's time to say goodbye. So it was absolutely great to have you here with me, and I look forward to seeing you in the next webinar. I got a really good question from one of the clients. How do you read news, and how do you incorporate the news into your trading? So this was such a great question that I decided to do a whole webinar on this. So here we go. I want to advertise it now. It's going to be in 1 month's time, and we'll send you emails about it. So just make sure you register for it as soon as possible, and put a reminder on your mobile phone. I think it's going to be the 16th. Let me just double check from the calendar. Yeah, it's going to be July. No, it's going to be 13th of July, 1-3. So maybe for the day before, you can make a note in your mobile phone calendar that the next day there's the webinar that you want to definitely be part of. Excellent. Hey guys, thank you for this. It was fun, and I look forward to seeing you. Send me emails, send me questions on, I'm actually going to give you the email address here, but you can send your questions to support@tiomarkets.com. And I'm going to give you my personal, it's first name dot surname @tiomarkets.com. Excellent. Thank you guys. Have a great day and trade safe.